There's a lot of optimism as countries around the region start opening up. What kind of opportunities are you seeing? What kind of demand are you looking at in terms of insurance demand?
So we're seeing a real uptick in demand for healthcare products. I think COVID has made people far more aware of their personal vulnerabilities in terms of health matters. That's the first thing. And the second thing, with all the volatility in the market, we're seeing people really looking for a different way to save, where there may be guarantees that an insurance company can provide. When the market's always going up, everybody thinks they're a Warren Buffett. When the market's highly volatile, actually everybody wants a little bit of certainty, a little bit of comfort, and that's when they start pivoting towards insurance companies. So we see it as an opportunity for both health and in terms of the savings space.
An uptick, 20-30% uptick, is that a fair assumption?
So what we're seeing is in terms of number of policies that we're selling. So for example, last year we saw a 41% increase in the number of health and protection policies being sold. The average case size was down, partly due to the element of the uncertainty in the economy and people's uncertainties and lack of appetite to connect and to commit maybe for a 5 or 10-year policy. So they're having slightly shorter duration policies, but really everybody's saying, I want to get some cover. So with increasing inflation and with uncertainty in the economies, we have adjusted our products to be able to provide more bite-sized, more minimal cost affordable cover. So for example, in Vietnam, you can get cover for cancer for under $1 a month. So those are some of the products that we've started to roll out in some of our markets to adjust to the environment.
Mark, this is a highly competitive industry. It's being disrupted heavily by fintechs wanting, I guess, a slice of the pie. How are you responding to that?
So one of the key things that we've found is the pandemic over the last few years has accelerated all the traditional players' digital agendas. It's enabled us as an organization, it's enabled our people, it's enabled regulators, and it's enabled our agents and our customers to engage with us in a very different way. So the organization is transformed in a far greater fashion than we probably thought we were going to be able to achieve ourselves left to our own devices. So we've transformed more quickly, we've transformed in a more extensive fashion on a digital basis so that we sell more products. We're doing more underwriting that's almost straight through, fully automated. And if we don't, the small, nimble fintech players are going to eat our lunch. So it's important that we adjust and that we're agile in our response.
Prudential has talked about pivoting to Asia. Give us a sense of the manpower. Are you shifting perhaps the workforce from the UK to Asia? What do you have in mind? What's the strategy there?
So last year we finished our financial restructuring in terms of spinning off our US business. So now we're pure Asia-Africa play. We're in 15 markets in Asia, 8 markets in Africa. And we have about 14,500 employees in Asia, and we have over 500,000 agents in Asia and Africa. We are reducing the size and scale of our London operation, and we're bringing more people to Asia, more roles to Asia. So we've got additional people in Hong Kong, we've got additional people in Singapore. And all of that is reflecting that as our stakeholders pivot more and more towards Asia, we want the right expertise in Asia to be able to deal with it in the right time zone, but also, and probably most importantly, with the right context of the markets and what's happening in the market.
China is a big part of the Asian market. There are talks about perhaps a joint venture, a JV with Citibank in terms of wealth management. Can you confirm if there are such plans, there are such talks?
So we have an existing JV with Citibank. It's been in place now for 22 years. It's very, very successful. We've made no secret of the fact that we'd love to own the other 50%. But to do a transaction, we need a willing seller. At this stage, we're looking to grow the business, make it as successful as possible, in the view that as and when an opportunity arises to buy the balance, we will be able to then buy a bigger, more successful business in the future. China is a very exciting market for us. The level of penetration in insurance in that market is very low. It's about 3.5%. So there's so much more that we can do on a kind of health and care and savings product. Pensions is a huge opportunity in China. The vast majority of the population have a very, very low level of pension. And with the aging demographic, it makes it a very real opportunity for us and others in the market.